Demand is really strong right now. The consumer is strong. We've had this month 6 of our 10 biggest booking days in history. The other 4 record days were in March before Silicon Valley Bank. Demand is really good. Bookings are strong. It's going to be a busy summer.
In this video, we're going to take the financials and the fundamentals of UAL, and you will understand the context of the company as a whole. Welcome back to Take It Finance, and thank you for choosing to watch this video. No more talking, let's cut to the chase. UAL, United Airlines, is an airline company, as you can guess from its name, and it transports people and cargo, and it operates domestically and worldwide. Let's zoom in for a second to New York area to understand the power dynamics in this area. So United Airlines is the second largest airline company after Delta Airlines, and it serves the Newark Airport and the LaGuardia Airport. United Airlines gets a lot of revenue from Newark Airport, both domestically and internationally. But you should know, and maybe you know it already by yourself, that Newark Airport has the largest potential for operational issues and also the lowest on-time percentage. Just take an example that by the end of June, almost 3,000 flights were cancelled, and most of them were from Newark Airport. Many people, reporters, and crew staff criticize the company for overbooking and overscheduling flights when the airport is not able to execute so many flights. While the company has cancelled 3,000 flights and people were stuck at the airport and didn't reach their destinations, their CEO chose to take a private flight. These kind of events can affect the goodwill, which is the good name of the company. Compared to other airlines, United Airlines has a higher cancellation percentage, while opening new lines to new destinations. United Airlines' revenue is composed from 3 sources: passengers, cargo, and other, and it is clearly that the main source of revenue comes from passengers. Besides COVID-19, which is understandable, the revenue of United Airlines has an upside trend. On this regard, we should say a good word for the management about their decision not to fire all the crew members and the staff during COVID-19, because they knew that after COVID-19 the recovery will be quick and the flights will come back to normal. So they took on themselves the losses, and now, as you can see, they bounced back.
The next challenge that we see in aviation, there's plenty of challenges, but we're going to double the amount of passengers that we're carrying versus pre-pandemic within a few years. It's just airport constraints and the facilities, and checkpoints are a perfect example. And the lesson from that, we are working with airports to improve it.
Regarding the margins, these are the margins of the company, and basically these are the normal margins for the airline industry. There is no improvement in the margins, and the margins are low. It's important to note that in the near future the company is going to have a lot of expenses. As part of our United Next plan, in June 2021 we announced our firm order for purchase of 270 new Boeing and Airbus aircraft, which at the time was the largest combined order in the airline's history and the biggest by an individual carrier in the last decade. As of 2022, the company has 868 aircrafts, with an average age of 16 years. It's one of the oldest fleets, and it seems like the company is planning to renew it, but this renewal will cost a lot of money. Their future domestic growth plan is dependent very heavily on Boeing, which they order from them all the MAX 10 aircrafts. And the production of those aircrafts might take time, and the operation of those aircrafts is not going to be very soon, which will affect UAL. Another big expense that is waiting for United Airlines is the agreement that they reached with the Airline Pilot Association. After 4 years of negotiations, the company has come to an agreement with the pilots to pay them for the whole contract $10 billion. When analyzing the situation from an investor's perspective, on the one hand, it is good that the company has come to an agreement with the pilots and there might be less no-show to the flights. But on the other hand, this might affect the big expenses the company is facing, and it will affect probably their operating margins. And it's interesting how the company will sort it out in the future in terms of profitability. If you like the video so far, don't forget to drop us a like on this video and subscribe to our channel. Now let's take a look at the operating cash flow of United Airlines. Overall, we can see a positive trend, and the company is recovering after COVID-19. Of course, at COVID-19 the situation wasn't that good, but now the situation is better, and the operating cash flow exceeds the net income except 2015. This way we can see how much the company is generating from its core business compared to what it states as a profit. On the other hand, when looking at the free cash flow, we can see that the free cash flow is all over the place, and this goes hand in hand with the ROIC. But when you're looking at the ROIC, you should remember that this is the overall trend in the airline industry. When we're looking at the debt to capital ratio, we can see that it is not so high, but it grew from 2018 up to now to around 40 to 50%. But at the current financial situation now, when the interest rates are high and the interest coverage ratio of the company is not so high, it puts the company in a pretty risky position to pay back their debts and loans. We can see that the company is using debt to manage and grow their revenues, and we see that it's working for them, as in the last quarterly report. But the question is, with their big growth future plans, can it be sustainable for a long term? At this point, we want to encourage you, if you're interested in investing in United Airlines, to do your own due diligence about the numbers and check it very, very carefully. When talking about United Airlines, we can't disconnect it from their competitors, Delta, American Airlines, and Southwest. The airline industry is very competitive, and there are companies that are bigger than United Airlines, such as Delta and Southwest. And you need a lot of resources to grow your revenue and grow your operations. With all the respect with the growth initiatives of the company, not everything goes as planned, because things like lanes, service, crew members, and staff in the airport is not something that the company can influence and do something about it. As long-term investors, we believe that the stock's price tends to follow the company's fundamentals in the long run. While analysts expect that the company will grow more than 60% a year in the next 5 years, we will go for the moderate case of 10% a year. If the company will maintain a PS of 0.42, which is the lowest PS of the company, with a growth of 10%, the company might grow at a 12% per year, reaching $92 by 2027. Looking at the company from this perspective, it looks like the company is undervalued and has a margin of safety. But we personally will not invest in companies from the airline industry because there is too much risk involved for us. But if you're into cyclical stocks, there is actually a company that we are invested in and we believe in, which is Malibu Boats, so you're welcome to check the video we've made about it.